Welcome to TradeTheMBA.com. This is John. This report is for the 2nd of January, 2026. About to start. It'll be a fairly decent beginning to it, but nothing surprised us about the end of things. As we could see, the deterioration was built into it. It actually was much stronger from a NASDAQ standpoint. We did dip below the red line from an extreme standpoint. So, it's going to take a little more effort before things stabilize. And at this particular stage, even pops are probably going to get sold into briefly. From an NQ standpoint, all the way to the 50%, and then a nice rebound right off that, at least in pre market so far. And that's just because there's no new negative. So nothing to get overly excited. We can see the shorts have also faded off quite a bit. So they got their pleasant return for the end of the year. Everything starts to rebalance, and then you got to put money back to work and starting a whole new direction. So in the NQ, and this is going to be a continuation of whether or not the AI trade is really, where it's at. And if that starts to stumble, could be a real issue because there's only a couple of main players, and if they suffer, it's going to bring back the whole index simply because they're so overweighted now. From a treasury standpoint, the odds are still that the Fed is forced to continue easing and be softer. Again, it all comes down to whether the war ends or not. From an oil standpoint, none of that's changed, and the bet that you're on the bottom side of things is better than where we were, earlier in the year, but um, it's still not enough to make a huge drive, though we saw pretty decent numbers from an economic standpoint as things are starting to build. It's just, I think it's just going to be uneven, and it's really going to depend on energy rates in different areas. And of course, the EU is still building towards their war thing, so disproportional from at least what the eurozone is creating versus the dollar, but it's an indication that there's just still no respect for the dollar, and the belief still that tariffs are going to be the undoing of the U.S. economy, which continues to be a laughable one. I mean, talk about one of the biggest errors ever in economics. That was probably the single greatest one. It was just foolishness, no concept whatsoever of basic economics, but that's okay. From a gold standpoint, it's going to continue to climb. It was a nice little fill back in. Some of this was the margin changes that they set up just to stop what was happening, because in the real world, everyone was moving to from not only gold but silver actual delivery, because there was a question as to whether or not the certificates actually could be backed up with the actual supply, and that was posing a bit of a problem. It's really couldn't match it, and so the change in margin in that prevents that kind of abuse, so to speak. We'll see if it plays out, but with volatility like that, it's always an excuse when they change margin requirements. And that, from a crypto standpoint, still not a whole lot of activity within the broader sector. Nothing's changed pretty much. Still waiting for some kind of conversion to where it becomes nominal everyday use. And until that point, it's always going to be a fringe situation. So we had marked the positive extremes, and what a shock, they got filled. I mean, duh. We pointed out every single time when it happens. They were right here on the 22nd, right there. Boom, filled it in the pre-market before the rally. And how often do we see that where you get it, then they push a little bit just to see if how many stops get hit beyond it. Wasn't that much, and then at that point they just started buying everything up, and it's pushed us all the way back up to the secondary one. Over and over again, we see it all the time, and that's the beauty of having the indicators from that standpoint. We're able to see this, know exactly when it's going to happen, and just let it fill right in. I mean, it just pretty much sets your spacing and tells you exactly what you can look forward to uh, from a range standpoint. Intraday, you can see it was pretty ugly from the end of the year, and it's all been upside pre-market setup. Great way to start the year. Indicators all went out, so everyone's got that, and we're all set to go, and should be another good one. As always, anything relevant, I'll put it on the team chat. Have a good one. Trade well.